The burgeoning world of cryptocurrency has captured the attention of investors both seasoned and novice. While some dive headfirst into the volatile ecosystem of individual tokens, others seek a more measured approach. Enter the ProShares Bitcoin Strategy ETF, BITO, the first and still largest U.S. exchange-traded fund, ETF, offering exposure to the world's most renowned digital asset, Bitcoin. This article delves into the intricate details of BITO, aiming to equip potential investors with the knowledge necessary to make informed decisions. We'll explore its historical context, investment mechanisms, performance track record, associated risks, and potential benefits. The dawn of Bitcoin ETFs. Before BITO, gaining exposure to Bitcoin involved navigating complex cryptocurrency exchanges or cumbersome over-the-counter, OTC, transactions. The lack of regulated investment vehicles deterred many traditional investors, wary of the nascent asset class and its inherent volatility. This changed in October 2021 with the Securities and Exchange Commission, SEC, approving the launch of BITO. ProShares, a pioneer in innovative ETFs, seized the opportunity, bringing the first regulated Bitcoin-linked product to the U.S. market. This groundbreaking event marked a watershed moment, unlocking access to Bitcoin for a wider pool of investors seeking diversification and potential for high returns. Behind the curtain, how BITO tracks Bitcoin. Unlike traditional ETFs that hold physical assets like stocks or bonds, BITO doesn't directly own Bitcoin. Instead, it seeks to track the spot price of Bitcoin through a futures-based investment strategy. This approach involves entering into contracts that obligate the ETF to buy or sell Bitcoin at a predetermined price on a future date. The underlying mechanism involves continuous monitoring of the Bitcoin futures market by BITO's fund manager. The manager buys and sells futures contracts strategically to match the price movements of Bitcoin as closely as possible. This dynamic hedging ensures that BITO's net asset value, NAV, reflects the underlying Bitcoin price, minus the expense ratio. Performance track record, navigating the Bitcoin roller coaster. Since its inception, BITO has closely mirrored the volatile nature of Bitcoin, offering investors a convenient avenue to participate in the cryptocurrency's price fluctuations. While BITO's daily and even monthly returns can be dramatic, its long-term performance has mirrored that of Bitcoin itself. Over the past year, both BITO and Bitcoin have experienced significant swings, with periods of exhilarating gains followed by steep declines. As of January 4, 2024, BITO's year-to-date return stands at roughly minus 25%, closely reflecting Bitcoin's performance. It's important to remember that Bitcoin, and consequently BITO, is a highly speculative asset with inherent risks. The price can be influenced by a multitude of factors, including regulatory developments, media coverage, technological advancements, and even global economic events. Understanding the risks, before you dive in. Investing in BITO should be approached with caution and meticulous understanding of the associated risks. Some key considerations include volatility. As mentioned earlier, Bitcoin is a notoriously volatile asset. BITO's price will directly reflect these fluctuations, potentially leading to significant losses in a short period. Regulation. The cryptocurrency market is still evolving, and regulatory frameworks are constantly being shaped. Changes in regulations could impact the availability and functionality of BITO, potentially affecting its price and investor access. Security. While BITO is traded on a regulated exchange, it's still exposed to the risks associated with digital assets, including hacking and cyber attacks. Investors should ensure they invest through reputable platforms with robust security measures. Limited track record. While BITO has been successfully tracking Bitcoin since 2021, its relatively short history limits the ability to assess its long-term performance and sustainability. Potential benefits: why BITO holds allure. Despite the inherent risks, BITO offers several potential benefits that attract investors. Diversification: BITO can act as a valuable diversifier in a traditional portfolio, offering exposure to an asset class with historically low correlation to stocks and bonds. This can help reduce overall portfolio risk and potentially increase returns. Convenience: BITO provides a regulated and familiar investment vehicle for those interested in Bitcoin without the hassle of setting up crypto wallets or navigating complex exchanges. Transparency: BITO is traded on a major exchange and subject to SEC regulations, ensuring transparency and investor protection compared to the opaque world of individual cryptocurrency exchanges. Potential for high returns: Bitcoin has historically delivered impressive returns, despite its volatility. BITO offers a way to participate in this potential upside without directly owning the underlying asset. Beyond BITO, exploring the diverse ETF landscape. While BITO remains the dominant Bitcoin ETF in the US market, it's not the only option. Several other Bitcoin ETFs have emerged, each with unique features and investment strategies. Some cater to specific risk tolerances, while others offer exposure to Bitcoin derivatives or thematic baskets linked to the broader cryptocurrency ecosystem. Exploring alternatives can ensure you find an ETF that best aligns with your specific needs and risk profile. Education is key. Regardless of your eventual decision, thorough research and ongoing education are vital when venturing into the world of Bitcoin and related investment vehicles. Staying informed about industry developments, regulatory changes, and technological advancements helps make informed decisions and navigate the often volatile cryptocurrency landscape. In conclusion, BITO's arrival marked a turning point in making Bitcoin accessible to a wider investor base. While it offers a convenient and regulated pathway to participate in the world's leading cryptocurrency, it's crucial to do your due diligence and understand the inherent risks involved. By carefully considering your financial goals, risk tolerance, and alternative investment options, you can make an informed decision about whether BITO deserves a place in your portfolio. Ultimately, the path to Bitcoin exposure through ETFs, or any other avenue, should be paved with knowledge, prudence, and a healthy dose of risk awareness.